Hey everyone, welcome to Breakout Wednesday. It is the 15th of November 2023. It's currently 9:30 on the West Coast, 12:30 p.m. on the East Coast. First of all, remember this is never financial advice. I'm not a financial advisor. This is simply a video blog on how one trader sees a market, and everyone needs to take responsibility for their own decisions. Okay, now here's a chart of the All Ords, and we're having a massive day today because the American markets were up big last night. Okay, we had all the mega caps back at all time, back at new highs, and it's looking pretty good. But it wasn't very long ago, obviously, when this was happening, and a lot of people were shitting themselves and giving up. Okay, and so I know I always say this, but it just pays to be working hard during market corrections, because that's when the money's made. Looking at the winnings, at the stocks that are kind of setting up during these down periods and getting long. Okay, when they break out quickly. Just some new stuff to quickly rattle through. There is Protrader now has an ARC tool. If you come down the bottom here, okay, let me just get rid of it here. If you come down the bottom, it's right here, and then you just do a line across, and then you can just play around with it and create it and edit it and stuff. Okay, it's pretty cool, and obviously it's not it's not a massive development, but it's a pretty cool to have it, and you can edit it all you want, like you can with trend lines up here. Okay, the color, the thickness of it, or that solid dash dot, all that sort of stuff. Okay, so that is some a new development on the Protrader front. Also, I did a new blog yesterday, just going through my favorite books and videos and stuff. I'm going to put a link below this video if you want to read that, because it's I think people getting into trading, they always asking what books, what videos, what should I read and listen to get started, and I've just summarized it and put it in an email post. You can view it just by putting your email in and clicking, and you can see it all. So I'll put the link below for you. And now let's get into some stocks. So stocks that I was talking about last week, let's just quickly run through them. First of all, C79, which I think I forgot to update last week, was this awesome base here that nudged up, and then the market corrected, and it only corrected a little bit compared to the market getting hammered. Still long, and then it's had a rally up, had a cap raise in here at some stage too, I think. I'm still long that, haven't sold anything, and so that one's going well. DDR, okay, well, not much to report, still going well. FMG's gone nuts this week, holy hell. I've actually got out of most of that today on this massive gap up. So got a little bit left, but I didn't expect to get this move, and so with this huge gap up this morning, just decided to hear that cash register ring and just cash in a bit. So that's FMG. TNE, okay, it's back up to my break even and just a bit above that. I actually bailed out of most of that, guys. I just, it's rallied on these lows. I should have actually been stopped out of it. I wasn't, as I went through last week. And I just probably should have left that set up. If this sets up again, I'll get back into it. But for now, I'm just lucky that the market, rally saved me on that one. What's another one? CDA. I'm going to talk about this one later, but I'm still in it. Okay, here was the entry here. I was carrying a loss and then break even. Now I'm up, but I'm keeping it. And I'm going to show that one later in a scan and why I like it. And AVGO. Okay, the new big base I was talking about last week. This was the best base I could find on any market, and it's broken out, and I've got about 1/4 of my entire trading account in this stock. Okay, maybe that's big, maybe I should be more diversified, but that's the way I do it. And I'm not scared to put 60-70% of my account in one stock if I pyramid into it smartly. Okay, not all at once, but gradually. Okay, so this gives me another setup, and I still think it's the strongest setup in the market. I will get more of it. Okay, that AVGO, I'm hoping this is setting itself up for a massive move here. It's an expensive stock. I don't care. It's like real estate. The best houses and the best suburbs cost more than some shithole in Shitsville. Okay, it costs more for a reason, and I just don't care about an expensive stock, because I still think they can fly 20, 30, 40% when they want to. Okay, which I think I've proved time and time again with some of these high-flying NASDAQ stocks. Okay, the Googles, the Metas, the Facebooks, the Apples. These things can move. Just because they're big doesn't mean they can't move. Okay, and so New setups quickly. I'm going to just power through it this week because I've got some shit to do. So MEI is just hasn't broken yet. It did threaten on this day to suck some people in, but once again it hit this wall of resistance and sold off. Okay, massive resistance up here. It's kind of nearly too obvious, isn't it? That but wow, it's a great base. I have to take it when it breaks, if it breaks. So it's just a matter of being patient on the old MEI, okay, and seeing if it breaks. If it doesn't, who cares? If it does, I'll be in it, and for better or worse, okay. Now, I just want to do a quick scan that I like doing, high, 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 low, but actually click in weekly data. Let's first do it on the ASX. Give me a sec while it just does this scan. All right, and then I kind of do this a lot just because it finds stocks at key levels that are being based in. And there's just one here, I'm not going to run through all that I kind of like the look of, and it's actually broken out today, which I was hoping it wasn't going to, but BLX, Beacon Lighting on the ASX, okay? So just the high, low scan just finds obviously stocks on a weekly scan. I did this on weekly data that come up, form a key high, and then just base sideways, and then it will find that stock when it's nearing this line. Okay, I like BLX because it has just based tightly for a long time. Like if you look at this rally here and then comes down, that retracement there is pretty tight. Okay, so it's like what's that? So it's about 50% retracement of this move, and which is good. And then it bases, and then breaks out. Okay, so obviously that's having a big move today. Damn it, but that came out last night, so that's a shame. But anyway, and now I'm just going to do that same scan. I want to do a new scan now. So let's just go to Frank's pattern. I'm just going to show people exactly how I'm finding some of these big moving stocks, right? So this is a scan I shown last week that found me the AVGO trade. Okay, it's just a weekly scan. This is a weekly Frank's Darvas box scan, really. Okay, and the first one that comes up is ACF. Okay, so ACF, if we look at a 10-year chart or 5-year chart, it's just got blue sky above it. It's been in a big uptrend, and now it's been basing for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, maybe 13 or 14 weeks. Okay, if we look on daily data, okay, nice volume that's come in, and it's just statistically speaking, it's a very good looking base. It's pretty tight base. I just like this scan on weekly data because it finds me the big bases. Because really, if all I ever do is take the biggest bases in the market that break, that's really all I should kind of ever do, because statistically they just, it's just a great way to make money. Okay, I think the problem is that sometimes traders they want action, and they start taking signals on 1 hour charts and 2 hour charts and all this absolute crap that in the end probably loses them a great deal of money. Okay, but in the long run, taking the big bases on weekly and daily data setups is just a proven method to win, as long as you're good at controlling your risk and you're very, very, very disciplined. Okay, and so that's why I like this scan. So ACF is one that I like the look of, and I'm considering kind of entering that. And so there's another that came up on this scan on weekly data. I'm just going to speed to it here. Is CDA. Okay, obviously I'm already in CDA from this daily data. See, on the weekly chart, it's hard to even see the damn setup, hey, because daily data is just obviously there's a lot more noise. Here it was, and this is one of the risks in these down slope and resistance lines, right? You're trying to cheat and get into it early, but you often will get caught in shot because there's overhead supply here. Okay, it looks great when it works, but it's horizontal bases in my mind are always the best setups. Okay, like the AVGO, because it's black and white where the resistance is here. Hey, it's like bang, like there's no arguing. It's not as if 10 of us will sit around saying, oh shit, where should I put my buy stop? It's a no-brainer. There's only one place you could possibly put it, and that's above this resistance by 1 tick. Whereas the CDA trade, my first entry on it probably wasn't ideal. Maybe I should take those less, but anyway, now it is sitting in this huge Darvas box. And you know, this has been basing for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, about 13 weeks. It's tight, okay. There's a lot of room. You could just see this having a run and just rallying up here if we have a good market. And yeah, and so I'm going to double up on that. I think I've already said that last week, maybe, that I'm going to, you know, double my position. But yeah, 100%, no problem with that, doing that. And so CDAs also came up on that scan. And the other one that came up, which I can't remember if I've talked about, but who cares, is DBI. All right, and so it's obviously got a high 2.9, which is just a wick on this candle, but you know, this scan just will find stocks that are basing, right? And so here we are, just basing. Resource stocks are flying, Fortescue, you know, BH has been breaking out, Rio has been breaking out, and we've got DBI sitting here. Obviously, I understand that it's a bit in a different space to Rio and BH, but in many ways, it's a, you know, port thing, and they benefit from, obviously, you know, the winds that you know, that those other companies kind of bring with them. Okay, so it's a related sector. I meant to say, my phone was beeping at me and I was losing my train of thought. But it's a related sector. Obviously, I understand this is not a, you know, mining company, right? So DBI setting up in a really tight base within this massive base. Okay, but this, once again, like if you look at one sec. All right, so here's my order book for DBI. I just pulled it up for interest's sake. So obviously that resistance line's at 2.8. You can see the wall of kind of sellers sitting there at 2.8. There's a lot of kind of buyers backing up here. You can look at the ratios, bid size to ask size, all that sort of crap. And you know, it's just, this is not the sort of stock that's going to fly to $5 overnight, but it's a grinder. And I think if you're going to enter it, you got to realize that, hey, this is going to take a lot of patience, and you might get whipped around and it might go nowhere for 4 weeks, and then, you know, you might end up getting out with a 5 or 6 or 7% gain. So you need to decide if you want to tie your money up in a slow moving stock. For me, probably not, unless I have just ample cash sitting around. I'll probably try and put my money to work in something that moves quicker, okay? But this is classic, right? You got a resistance of 2.8, you got a kind of bit of a wall of sellers, and then it dies off. There are obviously quite a lot of sellers up here too, but this can change in a flash. I'm not actually one of those guys that stares much at this, you know. For most of my trades, I never look at the order book. I just think it's kind of a bit meaningless. If I was back when I used to do much more short-term trading, I was looking at it all the time, and but I'm doing things different now. I've got, you know, I've decided I don't want to spend my life staring at this shit, because, you know, it's really boring. Wears you down eventually, and it's just better ways to spend my time than staring at these stupid numbers. Okay, so I don't know why I brought that up. It's kind of a bit of a sidetrack, but DBI is based in, and then just wanted to quickly do that scan on, say, the NASDAQ. Okay, and just show a few other stocks that are just basing away, that I'm keeping an eye on. I'm just trying to find AVGO type setups, okay, because to me that's just perfect. Okay, I found one on BSY. I mean, it's not as good yet, but it's certainly got some potential there. So I'll just whack that in a watch list and see if that can just fill some, you know, a bit better of a base. Okay, I just would want that to come up, hit it, and then tighten up a bit. And then the last one I wanted to talk about, and this wasn't, one sec. Okay, I found it, HYW. Okay, so HYW is just sitting up here in this massive base. Okay, I just like how tight it is. All right, if you put your Bollinger Bands on there, you're going to see it squeeze in. It's obviously in the fin sector, but this is stock that doesn't have much history. Hasn't been around that long. It's choppy. You know, if you look at it on the daily chart, it's kind of this grinding a liquid stock that goes up, down, up, down. It's going to have wide spreads on it. But it doesn't mean that it does. You know, it doesn't move. Like if you look at yesterday, for example, it did. You know, still did 136,000 USD. So you know, for small accounts, you can get a position on. And you know, if you look at it, it does move cleanly. Like just look at it on a weekly chart and ask yourself, hey, like look at this pattern. Okay, it moved cleanly. It went from 660 to 750 in a matter of weeks. That's enough to make some good money. It is a sort of stock that moves clean. So I just like I like doing that scan. It finds endless examples of this. I'm not going to rattle through all the others because, I've been chatting for 15 minutes. I want to get out of here. But to just leave you with, I mentioned this on the kind of email newsletter thing I brought out yesterday, but the ABC has a podcast. I think it's just called the ABC, I don't know, ABC News Daily, I think, podcast it. I tend to browse through, and I had a podcast yesterday on how one bank tried to bury a scandal. A lot of you will know the story. I mean, I vaguely knew it as well from back, 10 years ago or whatever, but more than 10 years ago now, the GFC and stuff. But just, if you're sitting on the fence between, getting advice from so-called financial advisors, experts, all that crap, listen to this podcast, guys. No one cares about your money as much as you. Just because you got some kid who's 25 who's just done a course in how to manage, on fin advice, financial planning. I mean, it doesn't mean the guy knows jack shit. I guess in my experience is that some fin advisors and people, some guys I've met over the years with financial advising companies are some of the worst at actually managing their own money. And I just think that you can't trust anyone. Okay, it doesn't matter if it's stock trading courses online where you pay $1,000 for a course, or someone telling you to, pile into some stupid investment. Why are they giving you the advice? If they're that rich, they wouldn't need to do it. To be honest with you, I guess it's the odd guy like Mark Minervini who's so loaded and he just likes doing it and charging heaps of money and making even more money, and that's fine. But there are exceptions, okay, and he is one. To be fair, he is definitely one of them, but there aren't that many exceptions, okay? And anyway, I've rambled too much. Have a listen to the podcast, figure it out yourself. But there's still dodgy shit like this going on every day, and I just think that if you want to get ahead, it's up to you. Take charge, do it yourself. Never give up. Resilience and a plan, and you can achieve anything. All right, catch ya. Bye.